Hello, and welcome to myfinanceteacher.org. Today we're going to have a quick look at energy fuels, ticker UUUU. But before that, let's also have a quick look at the uranium prices. Here's a chart going back to the beginning of 2017. And the way I see it is, it seems that uranium follows these intermediate cycles lasting for around half a year or so. I think the most recent cycle started over here at the very end of 2020, in November 2020. And so far this cycle has already been going on for a couple of months, but unfortunately so far it's not giving us any substantial price rallies. The price is actually just a cent below its 50-day moving average, which is not really a good sign. Perhaps after the rally of the previous uranium cycle, this cycle might give us a bit of a consolidation over the next few months. On the other hand, looking at a longer-term view, I think uranium prices did bottom over here in the end of 2016. Possibly uranium is now in its bull market, and if over the next, well, say a couple of years, uranium prices come back to some of its previous glory, previous highs, then some of the uranium miners might also do amazingly well. And talking about uranium miners, let's have a look today at energy fuels. As usual, this is a fundamental analysis. So basically what I'm doing here is I'm looking at the value of the reserves and resources that the company has in the ground, that value per share after production costs, any long-term debts, and that value discounted over the mine life. Remember, actual day-to-day market share might actually be quite different from this, let's call it some fundamental valuation. So this video is not any sort of investment advice. In this video, I simply share my views on the fundamental value of the company. The sources of the data presented in this video are the 2019 annual report, more recent corporate presentation from January this year, and also some data from Yahoo Finance. Next, let's go through the actual details of the data. Starting with uranium prices, as usual, I'm going to have a look at three scenarios. The balanced price of around $30, that's close enough to the ongoing current price. In the conservative scenario, let's have a look at a price 10% below the balanced price at around $27. And for optimistic scenario, let's plug in $42. Yes, this $42 might not actually be optimistic enough over the very long term, given the potential increase in demand for uranium over the next, say, 1 or 2 years. But let's just take things one step at a time. A 40% rise from the ongoing price of around $30 would already be a relatively optimistic outcome. Looking at the reserves and resources that Energy Fuels has, according to the 2019 annual report, and adding the inventory that the company has so far, that's from the January corporate presentation, the company has proven and probable reserves plus inventory of around 19 million pounds of uranium. The company also has measured and indicated resources of around 58.8 million pounds. That's excluding the reserves. Energy Fuels, besides producing uranium, also has some other lines of business. One of them is producing vanadium. Unfortunately, so far I haven't found any data for their reserves and resources of vanadium. What I know is they have around 1.7 million pounds of vanadium in their inventory. So let's just throw in this value into our reserves and resources as well. And I count vanadium at around a fifth of the price of uranium as it is right now. Looking at the production costs, unfortunately I didn't find any data on production costs, perhaps because most of the mines that Energy Fuels has are now on standby, so I just assume production costs of $26 per pound. That's actually quite similar to the production costs reported by CCJ Chemical, which actually reports around $26.3 per pound in production costs. Moving on to long-term debts, Energy Fuels only has $500,000 in long-term debts. Regarding the company's shares, Energy Fuels has 134.3 million shares outstanding, and 1.57% of those are in insider hands. As you know, we also take into account the time value of money, and in this case I'm going to use a discount rate of only 3%. Usually I use a 5% discount rate for gold miners, as you know, but to give uranium miners some benefit of the doubt right now, I'm going to apply a discount rate of only 3%. In addition to that, looking at current annual production, you get something like 100 years of mine life. So that would give you very low valuation because of discounting of future cash flows. Instead, I'm going to look at mine life based on their maximum production since 2005. And at those maximum production rates, the mine life is somewhere just over 5 years, which gives a better valuation with less of a discounting effect of future cash flows. As a reminder, in the conservative scenario, we only use a price of $27 and we only look at the proven and probable reserves in the ground, which in this case is probably much too conservative. And that gives us a valuation of only $13 per share, which is terrible versus the market price of nearly $3.9 at the moment. Looking at the balanced scenario with $30 per pound and still looking at only proven and probable reserves, which is still possibly a bit too conservative in this case, that gives you a valuation of only about 53 cents, which is still quite bad versus the ongoing market price. And only in the optimistic scenario, we see something more interesting. In this scenario, we apply a price of $42 per pound, and we look at the value of proven and probable reserves, as well as still only half of measured and indicated resources. Since we only look at half of measured and indicated resources, never mind any inferred resources, even our optimistic scenario is still leaning a lot towards conservative. So this gives us a value of $4.5 per share, which is finally attractive versus the ongoing market price of $3.89. So perhaps if the uranium prices do well over the next 1 or 2 years, there is an interesting potential in energy fuels. Otherwise though, if uranium prices stagnate over here over the next 1 or 2 years, I don't think investing into uranium miners would be amazingly profitable. Let's have a look at some highlights I've noticed regarding the company that don't actually enter into the valuation model. And the first highlight is that Energy Fuels will start producing rare earth elements in the first quarter of this year. So it will be interesting to have a look at their first quarterly report, possibly sometime in April. Secondly, as I mentioned, I didn't find any data for their vanadium reserves, which means that, again, the valuations presented here are possibly underestimated to some degree, depending on how much vanadium the company has in the ground. And besides vanadium, the company also has some copper reserves in the ground as well, which would also add something to the valuation of the company. Lastly, let's have a quick look at the chart. This is a monthly chart going back to 2012. And as you see here, if uranium prices do come back to some of their previous glory, Energy Fuels might also do amazingly well from here. Back in 2012, for example, the price range was anywhere between $14 and $20 per share. Over the last couple of months, as you see, the price retested the resistance zone based on this late 2013 low and came off from that resistance in January so far. If this rally continues and if this resistance is broken, the next resistance level will be formed by this 2014 low as well as 2015 high. That is just around $6 per share. So if that happens over the next, say, several months, that would be quite interesting. However, that will probably have to be accompanied by high uranium prices. And that actually brings us to the end of the video. Let me know what you think in the comments below. For now, I wish you a wonderful day and good luck in your trades.